The Prism indicator takes financial price data and converts it into a spectrum. Each color determines how price will behave, and since the colors are chronological, we can determine where a cycle begins and ends. The strategy explained in this video will originate within a new cycle and expand into the momentum phase. If you look at Apple Inc., you can see that the cycle that began in March has not ended yet. Notice the presence of orange candles at the beginning of the cycle and nowhere else. Let's go through the process of the orange candle breakout. We will be using this cookie cutter template as our guide. The template consists of 4 targets. Pre-pullbacks. The orange candles are the signal. For this strategy to work, make sure that bar color number 3 is orange. Starting from the top, drag the fib extension so that the orange candles sit below 100%. The color yellow indicates that this is a new market cycle. The strength of the rally is determined by how far price retraces. A retracement of 50% is a strong rally. Anything less than 50% indicates very strong bullish presence. The lime green color is indicative of the momentum phase. With momentum and price above the 50% fib, we are confident that this is a very strong rally. Create the Fibonacci structure by aligning the 50% line with 0. This strategy is systematic as we will align the Fibonaccis the same each time. Next, align 127 with 50. This is our plan. The structure can be applied where orange candles appear on any chart. Now, let's go through a hypothetical trade execution build. The strength of a particular impulse can be determined by whether or not price hits a pullback. If no one is able to enter a trade at the pullback level, then logically, all traders will have to market buy from the ask. Sell stops are placed below target levels in anticipation of pullbacks. In this case, momentum was too strong for a pullback. Buy stops are placed above pullbacks in anticipation of target levels. This saves us from a loss in the event that the price tanks beyond the 50% line. Let's compare the final chart with our cookie cutter template from the beginning of the video. There are 2 states where actual price action differed from the template. The first target is highlighted because we did not have a position at this point. The pullback is highlighted because strong momentum did not allow a pullback to materialize. Overall, the template worked well on this chart and has proven to be an effective method of visualizing structure on other charts as well. These are a few examples. Some are better than others. In very strong stocks, the orange candles are substituted with pink candles. The alignment and structure are the same. I will cover the topic of pink candles in another video.
Question: are all orange candles signals of equal quality?
In the ES futures market, where a dollar rise or decline is equivalent to a $50 gain or loss, a false signal can have a dramatic effect on trading morale and especially a dramatic effect on profit and loss. If there are multiple orange candle signals, how does one distinguish the good signals from the bad? The secret is hidden in the amplitude. If we strip away the cycles, the amplitude can reveal the strength of the orange candles. For this particular chart and time frame, amplitudes of less than 10 appear to be inferior in quality. Amplitudes greater than 10 behave the way we expect. In short, not all signals are equal.
Question: how does this indicator perform in an automated environment? Has it been backtested?
The earliest version of FMALHOT-B was tested in July 2020 called Modified MACD. The simplest strategy using this indicator is signal line MACD crossover. The percent profitable fluctuates between 70 and 80%, and even to this day, it remains a stable 70% on intraday time frames. The strategy outlined in this video with orange candles uses the same indicator but remains untested because the parameters of this strategy are beyond my coding ability. With both versions side by side, we can better explain how new cycles are created. Technically, new cycles occur only after the histogram reaches the lowest possible value, crosses the inflection point, and becomes positive.
Question. I found an orange candle with an amplitude of 4 on Euro US dollar. But according to my analysis, my target price is different.
Under normal circumstances, you will be looking for entry after the 68% retracement or after the 50% retracement. However, an amplitude of 4 means that there is not enough momentum and this pattern will most likely fail. We have a higher chance of success if the trade is reversed. The top of the orange candle is where we place the buy stop or stop loss. Our exit is a buy limit order or take profit. Notice the transition from new cycle into downtrend.
Question. I found orange candles with unusually high amplitude of 32. Is this good or bad?
Notice how amplitude accelerates from 3 to 32 in a very short period. This is due to the area in red, identified as alpha. I will cover alpha in depth in the next video.